Welcome back guys to T2SMC Trader. So here is another masterpiece video. Again, it can be a bit longer. I will try my level best to make it a shorter video. Don't forget to let me know if you have any confusion, as well as don't forget to give a like and subscribe to our channel if you are new. This is NQZ 2025 and this is Monday price action. I am using the daily chart. If you have watched the last video where I have explained how this market is going to work, which is actually the weekly analysis video. So it left that gap open. This is the unfilled gap as well as the daily bullish gap. This two line is the TGIF line. That means if you go to the weekly chart and mark that weekly candle or the last week candle, 20% and 30%. This is called TGIF. Some of you actually asked me about to talk about this TGIF. So let me start with the TGIF. If a weekly candle is kind of a prominent candle, not like this type of indecisive candle where there is a very small body, longer wick, or this type of candle where there is a small body and one wick, okay, kind of not a good candle. Look at this candle, not this type of candle. Some candle that is prominent, okay, something like this candle, that candle, that candle, that candle, that candle, that candle, or this candle. So if you have this type of good candle, then you will mark the TGIF line from the bottom to the top from the weekly chart, and then you will divide it by 20% and 30%. By Friday, you will expect that this market will close at the line of 30% or 20%. If it doesn't close at the line of 20 or 30%, it has to close in between these two lines, not below this line, not above this line. If it close above this line, TGIF is not done. If it close below this line, TGIF is not done. Here, last week candle didn't finish the TGIF. So this week, which is from Monday, I will look for this TGIF. So here you can see this Monday candle, which is going to close around 4:59. Right now you can see the time is 4:10. So I still don't know that it is going to close at this line, that line, or in between these two lines. But there is less possibility because after 4 p.m. most of the time market actually doesn't move anywhere. It just do consolidation and then close over there. So I'm predicting that this market is not going to finish the TGIF by Monday. So I will look for the TGIF by Tuesday as well. If this candle could close in between these two lines, or even if it could tap to this line, then fall, I would say that TGIF is done. Okay, so please make sure you are getting it 100%. Tap here, then fall, TGIF is done. Tap here, then fall, TGIF is done. Tap anywhere and then closed below this upper line, it is valid as an TGIF. That means the TGIF is done. But here you can see that this market didn't respect this two line. It just didn't respect. It went through this two line. Now these two line don't focus over here. This is the standard deviation line. I will talk about this after this. So you can see this Monday candle actually went through this two line. So the TGIF is not done yet. It went through this, it has closed here. Tomorrow I will expect that this market will fall and it will come here, any of this line, and then it will be respected and it will keep going higher. Okay, this type of situation will be expected from tomorrow. It can tap here, it can tap here, or it can go a bit lower. Nothing is wrong over here. All I'm seeing that can it react from these two line, and again can it close above the upper line here. If it could tap any of this line and then closed below this line, below the upper line, the TGIF is done. Same thing tomorrow, as the market is above the TGIF, so I will expect it will tap any of this line, then either it will close above or it will close at least above the lower line. If it is not clear yet, please let me know to the comment box. I will try to explain it a bit more. Here, when you are seeing this candle, which is the Monday candle, is trying to close over here, I'm perfect. Today my bias was bullish. Every single day my bias is bullish. Now I'm coming to daily chart. This is the Monday candle. So you have already seen the TGIF line, This is minus 2 standard deviation. This is minus 2.5 standard deviation. I am bullish for every single day. Okay, so when actually this market closed above this area, I was bullish every single day, every damn bullish. Until this minus 2.5 standard deviation, I'll keep looking for the buying opportunity. As you can see here, market has traded this bullish parabol gap, then this order block has been traded, and then this unfilled gap is still unfilled. That means this candle didn't fill this gap 100%. Market is going to close above this TGIF line. Tomorrow, my expectation will be it will come first here, any of this line, and then it will go higher toward that this line, okay, which is minus 2.5 standard deviation. When I'll be in lower time frame, you will be able to see these four lines, actually three lines over here. One, two, three. The first two line is the TGIF, which is the blue line, and this black line is actually minus 2 standard deviation. What else do you see around this area? Is there anything that is important to you? Okay, I would love to look for something around here, and that is this week over here. So if this candle can close at the level of this week, if it can close tick by tick at the level of this week, it can close a bit above this line, no problem. If it doesn't close above this line, then of course this TGIF line will be important to me. Remember, TGIF doesn't need to happen every time. It doesn't need to happen, but I have to think like that way. If this market can close at this line, then I will look for the quadrant level from that week. Is a very prominent week because it is, I will say, a kind of immediate rebalance week. Now, if it doesn't close at that line, of course, I don't need to think about that week. Instead of that, I will keep thinking these two lines. Today, of course, my bias was bullish from the beginning. I will talk about the PM price, New York session price action because the buy run happened. The all-time high has been taken before the AM session. So when I'll go to the AM session, lower time frame, the real price action will be explained over there. Before that, I just wanted to make sure that you guys actually understand this whole daily chart, the TGIF things, everything was absolutely clear to all of you. Okay, so if still you have some kind of question, let me know. This is the hourly chart, and as you can see, this was the previous all-time high. So I'm going to mark a line over here, which was a previous all-time high. Let me mark it as a green line. Okay, over here, let me mark it as a not green line, just think like that way. This was the previous all-time high, and you can see that this market has cleared that all-time high by that specific candle. This candle appeared on the chart around 8 a.m. New York local time. The New York session actually started from 9:30 a.m. New York local time. All-time high has been cleared before the New York session started. So market opened here on Sunday. Then market take that all-time high before the AM session. It is called overnight big run. If you ever see this type of overnight big run, always be careful because after the overnight big run, the morning session can be consolidation. Okay, it can keep consolidate. Now at the same time, when it opened, it is already above the all-time high and market is here before the opening. I'm more interested to see it is going to close in between these two lines, right? Because from the daily chart, you know that market start from here and I'm expecting any of these two lines will be respected. That means market is not going to close, the daily candle is not going to close above this line. So as before the market open, market was already above this line. It was already above that line. What should I think? It will keep falling and it will come to this line and the rest of the day it will trade here and then it will close over here. Now market didn't actually do that. Instead of that, it was extremely bullish and it actually closed over here. No need to worry about that. Just think or don't forget about this logic. The logic I'm explaining here, that you should keep looking for sell even if you are seeing this is a bullish candle. The whole market was bear market. It seems like very crazy, but when I'll be again start to explain, you'll understand why I'm saying that. So from the daily chart, hourly chart, you can see above this line, which is minus 20 standard deviation as well as minus 2 standard deviation. This was the hourly gap. So to that specific leg over here, where you can see this is the last fair value gap. So what happened exactly over here? Market has traded this gap and then it went higher. Now I would love to draw your attention something else over here, which actually didn't happen, but I was it if it would happen, that would be the best case of scenario. In this leg, market has cleared the sell side liquidity. Relatively equal lows has been cleared. I showed you how this market worked with the upper portion of the premium area. That means it never came to the discount area. Instead of that, it was in premium area. So if you are interested about to learn about the premium and the discount, please watch the video from the study folder where I have explained the premium and discount. This all was predicted from the weekly analysis video. So even before this market, I have predicted that it is going to work with the premium level. This gap is the last gap. Market has tapped to this gap. You can see this is that last gap. This is the lowest down close body close candle, which is my order block. So I'm going to mark that order block and extend it to my right. This is my order block, and this order block has been validated by this specific candle. Look at this candle. It has closed above this candle. This is a perfect order block. Why? Because it has traded this bullish fair value gap, which is the last fair value gap as well. Then this candle open, tapped to this order block over here. It has tapped to this order block, and then market went higher, took the all-time high. Recently, I have uploaded the order block video. You should be astonished by watching that video. Okay. So while this market was falling, I was pretty much confident that it is going to work with the 50% of this order block. So if I mark it here to here, this is the 50% or the mean threshold of that order block. The order block has been traded here already. Then it was falling, and I was thinking that, oh, okay, it will come to this mean threshold where I'm going to mark a line here. This is the mean threshold or the 50% of that order block. Now, what else do you see around this area? That TGIF line. So this mean threshold, if it could trade that mean threshold, that TGIF line would be traded as well. That doesn't mean that from the hourly chart it tapped here and then it went higher again. That means the TGIF is done. No, TGIF has to be done from the daily chart. But as I told, I was expecting this market will close in between these two lines. That is why I was expecting this market will fall and it will trade at least mean threshold, and then it will be consolidated rest of the day. Finally, it will close inside this area. It didn't happen. So this market fall came to this hourly bullish gap. I was thinking it was going to trade that mean threshold. It didn't do that. Came here, went higher, and take that high again. So this was the new all-time high before the market opened. So I'm going to remove this all-time high and going to keep that all-time high that has been created before the market opened around 9:30. Now I'm coming to 15-minute chart. This is around the 9:30. This is the market opened around the 9:30. Okay, so when the market opened here, what happened actually around this area? This is a gap. You can see this is a gap. So let me actually mark that gap over here to here. Extend it to your right. One candle has closed above this gap. The very next candle has closed below this gap, right? So this is the gap, and this is the fake breakout, as well as it tapped to this 8:30 open from Friday. This is the 8:30 open from Friday. You can see it has tapped to this 8:30 open here, as well as has been respected there. Finally, it respected here. This is that 8:30 open. Now, I really don't want to talk about that 8:30 open, but this market is actually respecting this bearish gap as by the what to say, I mean the fake breakout. One candle opened this gap, the very next candle has closed below this gap, as well as it has respected that 8:30 open from the Friday. So Friday, it is from the Friday or not? Oh, sorry, my mistake. It's not from Friday. It's actually from today. My mistake. So this is this is the 8:30 open from today. So market actually respected this 8:30 open, which has been created from today. I'm very sorry to say from Friday. It's actually from today. This is the best case of scenario, by the way. It respected this 8:30 and then it has fallen, came to this hourly bullish fair value gap, last fair value gap, as well as if you take a closer look from here to until the all-time high, from here to until the all-time high, can you mark the last fair value gap to that specific leg? I will start to look for here. Okay, from there is a very small gap. I don't like to mark this type of one handle gap or like one tick gap. I don't like to mark them. Of course you can do that. Even if you mark it as a last fair value gap, this should be your entry fair value gap. Both of these gap is important. Now, to be honest, I don't like to mark this type of gap Instead of that, I would love to mark this gap from the 15-minute chart, which is from here to here. This is the last fair value gap. There is no other fair value gap. I'm going to use it as my last fair value gap from 15-minute chart, where I'm actually narrow down this gap from hourly chart to 15-minute chart. So this market came to this all-time high, cleared the all-time high, made a new all-time high, respected this gap, then fall, came to this 15-minute last fair value gap. It was holding the market over here. It was extremely holding the market. Then this market went higher. Before going higher, it has built another bearish gap over here. So I'd love to draw your attention to this bearish gap over here, okay, which has been actually broken over here. Morning session, I told that I'm more interested to look for sell. Guys, I'm talking about the price action. Try to understand this price action, how to read this market. First of all, what is my intention? My intention is market will fall. It will come to this TGIF line because the TGIF is not finished by Friday. As the TGIF is not finished by Friday, I'm more interested to see it will come here, and today's candle is going to close in between these two lines. So that is my intention to see. Now market before opening, it is an extremely premium. Why? It is at around the all-time high. What is the rules of to trade the all-time high? When the market is around the all-time high, take only buy. No sell, take only buy. But in a short period of time or from a very lower time frame, you have to look for some other things. For example, liquidity, imbalances, TGIF line, or if you have something over here that is unfinished, you have to look a lot of things, right? Even though I should keep looking for buy, I'm trying to take the sell here because I wanted to see today's candle is going to trade this any of this line, and it is going to close over here from the daily chart, where you can see that the daily candle is going to close around here somewhere. So when there is a bearish gap as well as the order block, the consecutive order block, you can see these two highest up close body close candle that has traded this gap, which is my consecutive order block. Market has traded this consecutive order block, and then it should keep falling and it should come any of this area. It is my expectation. When this gap is broken, which was actually my importance over here, the gap was more important to me instead of this order block. When this gap is broken, what happened? This gap has been already violated, right? Body has closed above this gap, so you can't use this gap as your last favorable gap anymore because it has already been violated and it left the sign. If I come back again to this gap, I'm going to break it with speed. I'm going to break it. That is the gap, last gap. As it is violated, I have to think that for the next time, if it come here, it will break that with speed, and then it will keep going higher. So both of these gap I'll keep to my chart over here. But remember what I'm saying, until this gap is below, sorry, the market is below this gap, I'll keep looking for selling opportunity. If the body has closed above this gap, that is the area you should not trade. Do you understand what do I say? You should not trade. No trade is valid because here you are doing the analysis from the daily chart, hourly chart, and now 15-minute chart. Now you are in 1 minute chart. You have to take the decision depending on daily chart, hourly chart, 15-minute chart. From 1 minute chart, you are not going to trade here. So I'm going back to 15-minute chart one more time, and you can see market has closed above, sorry, here above this gap, and then finally came here, respected this order block a bit, then finally used this gap as inverse gap, as well as there is a 15-minute bullish gap over here. So let me actually mark that bullish gap over here. Okay, this is the 15-minute bullish gap. So when I will be in lower time frame, you will be able to see there is a 15-minute bullish gap over here. This is the only gap. Of course, below this gap there is one tick gap or something like that. You can see here there is kind of one tick gap or something like that. I really don't like to mark this type of gap, as I told. As this is the gap, you can see market actually tapped to this bullish gap as well as inversed this gap, which was I was using to think that this market will use this gap and fall. Remember, this was the gap I was using to sell the market much more lower, to throw the market much more lower. What happened when this has closed? This obvious gap worked as an inverse gap, went above the all-time high again, then it has fallen. As well as in the meantime, it has used this bullish gap. So I will be in 1 minute chart now. Don't get confused. In 1 minute chart, this is that 50-minute gap. All I'm showing you the 50-minute gap. So all the gaps you're going to see that they're the 50-minute gap. Just let me change the color over here so that you can understand this gap has been violated already. I don't need this gap, but I'm going to keep this gap over here to show you something beautiful over here. Okay, so just for that, I'm going to keep this on. So remember, this gap doesn't have any value. All the importance is this gap and that gap, as well as these two gap or these two line, which I'm going to make it bold. So when I'll be in lower time frame or 1 minute chart, you remember this is that bullish gap. Now I'm in 1 minute chart. This is the morning session price action. All of you were with me with this beautiful setup. You remember market actually went higher. This is that 930 candle. That is that 930 candle, and market fall gave me that market structure shift over there. That was that fair value gap over here. We have used this fair value gap to take the sell until this sell side liquidity. That was the sell side liquidity, which is just above this 15-minute last fair value gap. That was the sell side liquidity. Okay, so market has provided us a beautiful run toward our direction, toward our expectation. What is the expectation? Market is coming to these two line. So that was my expectation, right? Market has cleared the buy side liquidity over here. After 9:30, market has given me the market structure shift, and then this was the bearish fair value gap or only fair value gap. Trade that bearish fair value gap one more time, trade it, then market fall. Before falling, made the order block. This two consecutive candle is the order block. Trade that order block, then boom, took the liquidity, came to this area. After this fall, this market was a bit messy over here. You can see a bit messy. Okay, right? Consolidation, 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 a lot of consolidation over here. This is the first time this market has closed above this 15-minute bearish gap. That is the gap I was using to throw the market much more lower. Why? See this low and that low, they're the clean lows. Market doesn't leave that type of clean lows. Now today's market doesn't want to finish the TGIF. So if it doesn't want to finish this TGIF by today, that means it wants to keep the market lower by tomorrow. Still, tomorrow is Tuesday, which is the manipulation day. This market, I'm saying it to you today, is more interested to fall tomorrow instead of going higher. Now it can be changed by the new day opening gap, but still now I'm thinking this is a bearish market tomorrow, extremely bearish. That is the clean lows. That means this low and that low are the exact low. Market doesn't love to leave this type of clean lows over here, as well as -2 standard deviation. The what to say? I mean the what is it called? The TGIF line here and the TGF line here. I'm not interested to see it will be traded, to be honest. So I would love to see this will be traded and then this market will go higher. There is the morning session selling opportunity from there. Now, if you do the overtrade, then of course you will hurt yourself. Don't overtrade. Don't do overtrade. Just always go with the price action. And if you find the beautiful setup, just go for that setup. Be happy with your entries, and then just enjoy the price action rest of the time. If you do overtrade, you will always hurt yourself. Market has cleared the buy side liquidity, made the best market structure shift over here. That was an immediate reaction from the fair value gap over here. That was the fair value gap. So it immediately tapped to this fair value gap, then finally built the order block. So let me actually mark the order block, trade that order block and fall for this sell side liquidity, which is over here. That sell side liquidity we are talking about around here. That was the sell side liquidity. Okay, so market has finally fall for that sell side liquidity and then tap to this our 50-minute last fair value gap, started to consolidate for the rest of the day. That was a beautiful setup around the morning session. After that setup, this market was a bit confusing. That means kind of consolidation, overnight big run, morning session consolidation. Still I'm bearish. Why? This is that 15-minute bearish gap. It is still holding the market. I don't need to think about the bullishness because the market is below this gap. The whole morning session market was below this gap. Then this is that our lunch hour. Lunch hour start exactly around 11:30. Then finally market has closed above this bearish gap. This is the gap. I'm going to keep it here. Remember, this is the gap which I told that it's invalid because it has been fully closed by bodies. That is that gap, and this is that bearish gap. as well as the bullish gap from the 15-minute chart. If you are confused, just I'm going to show you one more time so that you don't get confused. This is that gap which I told it's been invalidated because the body has closed above this line. Next time it will come here, it will break this gap with speed. So I don't want to see any kind of reaction from this gap. This is that bearish gap I'm talking here. This is the bearish gap. Until this market is below this gap, I'll keep looking for the selling opportunity until here. If it is broken, that means no trade is valid. Remember, no trade is valid. As well as this two line is the bullish parabolic gap from the 15-minute chart. So coming back to 1-minute chart one more time. So what happened here? Exactly what happened over here. From the beginning, market has the buy side liquidity, this high and that high. They are the relatively equal highs, not a best or perfect market. Buy side liquidity. You can see this high and that high is also kind of buy side liquidity, because if you mark here to here, it is validated as an buy side liquidity. I have already teach you how to actually mark the zone about the buy side liquidity. So not going in deep details. Okay. So whatever. So finally, from the 15-minute chart, market has closed above this bullish gap. That means it's a no trade zone. There is no trade zone. I'm not able to push the button until 1250. So this is the 1250. Until that candle, no trade is valid. No trade is valid from 1130 to 1250. No trade is valid. What else do you see what happened over here? So finally, market came to this bullish parabolic gap after 1250, made the order block. The order block I have taught you a very nice way, beautiful order block, and then trade, and then went higher. Have seen that in my Discord. Some of you actually took that trade. Don't do that. I'm warning you, don't do that. Without context, don't go for the order block trade or any kind of model trade. Don't do that. First reason, if you do that, you are forcing yourself to go for any kind of trade. I can do whatever I want to do. This confidence will break you pitch by pitch. It will break you. Trust me, man. So please don't build a habit that is gonna hurt you so much. According to the logic, it is obviously valid. This is obviously valid. So I'm going to remove this gap, because this gap I kept here just to show you that when the body has closed up this gap, no more sell is valid until there is something so obvious to me. Some kind of sell, something has been cleared, some gap has been traded. Until then, no trade is valid, no sell is valid. I'm not interested to take the buy, because taking buy is kind of gambling. So here you can see after 1250, finally this is the only candle. So if you want to mark this candle, it's not a valid order block because it didn't tap to this gap. This is the first candle that has tapped to this gap. Okay, and then it has closed above this candle, which is a valid order block. That is the order block. What do you have over here? Clean buy side liquidity. Do you see the beautiful buy side liquidity? What did I say? Clean highs, clean lows are extremely strong. So this is the clean highs over there. The next candle tap to this order block over here, around there. So your entry should be there. Stop loss 2 tick below this order block, and then maybe like 20 handle partial, something like that. Okay, so that is the trade I have seen that you guys actually marked. I would love to remind you one more time. Don't do this without context. Don't go for the trade. Now, why I'm showing this to you? You can tell that, brother, I have seen this clean highs over there. Okay, when I have seen this clean highs, remember, it is out of context, but I have that clean highs, and I have found the best order block you have taught us. I went for this trade as I should close my trade here. I just didn't close it here. I tried to take it like until 20 handle partial. Okay, if it can give me, maybe after clearing or going above that high, you put your stop loss to the break even, and you tried to hold the trade until the 20 handle partial, or maybe then hold the trade as long as you want the partial. Okay, I'm good with you. But if you have taken this trade without this context, that there is clean highs, which is tick by tick, this high and that high. Look, just look over here. See this AH over here, 25, whatever it is. Okay, just look over there. What is the high over here? 25,204.75 here. Okay, 25,204.75. Look at that high. 25 204.75. It is called clean highs. Market never leave this on. Like here, I have this clean lows. It left it over here for today. I'm pretty much confident tomorrow it's going to be taken. So tomorrow is gonna be a beautiful day for me. A beautiful day, by the way. So here, if you have taken that trade, depending on that context, I really appreciate it, man. But still, it should not do that. But just because of this, I can accept your entry over here and I can validate this trade to you. Okay. Without this, I'm not agree with this trade. Okay. So here, when this market actually came and made build this order block inside the PM session, that is the first opportunity. Remember, I'm not looking for sell anymore. Why? Because market has closed above this gap. So I'm not interested to look for any kind of sell anymore until this market doesn't trade a specific area. Now, if I go to the 15-minute chart one more time, and you can see that there is no 15-minute something that is kind of bearish fair gap, nothing over here. I don't have anything over here from 15-minute chart. If I go to the hourly chart, same kind of scenario, nothing over here. Just you can use the 50% of that week, this that week, okay, that week 50%. You can mark it, and of course you will see you will get nothing over here. Just if you want, you can do that. But from the our higher time frame, I have nothing over here. So I'm coming back to 1 minute chart again. What is my context from the beginning? This market will come here. Guys, I know that it's gonna be a bit boring, but I am trying to be very specific with the price action step by step. Okay, I could ignore a lot of information. I am not interested to ignore the information. Instead of that, I'm trying to put all the information, all the context, so that it's going to be easier for you to understand how you are thinking in that market, what you are doing in that type of situation where the market is pumping. Okay, so first, when this market closed above this, no more buy or sell is valid. Nothing is valid until this market doesn't trade any kind of specific PDRA before falling. So here, I'm going to draw your attention to this last gap from the 1 minute chart. As I don't have any other higher time frame, okay, so this is the only only PDRA that I can use to fall or the send the market lower. Okay, so here that is that last parabolic gap from 1 minute chart. At the same time, when it came here for the first time, it has been respected a bit over there, then market fall, use this bullish parabolic gap as well as this bearish gap worked as an inverse gap. Nobody has closed below the consequent encroachment of that bearish gap from the 15-minute chart, then went higher, came to this last parabolic gap. Now, if you take a closer look, this candle or that wick didn't tap to this last parabolic gap. Look very closely. It didn't tap to this last gap. No, didn't reach over there. Okay. Instead of tapping to this last gap, it cleared all the highs. All the highs has been cleared over here, and then this market was consolidating over here. When this gap has been broken from the higher time frame, this is the last fair value gap. I told that it is not valid because the body has closed above this gap, and then it has went through this gap with speed from 15-minute chart. Then it come back again to this last fair value gap. Now, this gap is not a gap that I can use as my inverse gap. From 15-minute chart, I'm talking about this gap. I can't use this gap as my inverse gap. But brother, it worked 100% so beautifully. I don't care. This is random. It didn't trade this gap. Trust me, man. It didn't trade this gap. It has traded this bullish fair value gap. See this bullish fair value gap? It has traded this bullish fair value gap. This market is not watching this gap. This gap doesn't have any value when it has went through this gap. But this gap has the value. This is the last fair value gap. But you told that it has already closed this gap. Even if it is closed, next time I have seen this big run through this gap, if my bias is bullish, I can use this last gap to take my buy. Just this gap. But this gap doesn't have any value to me. I'm not interested to look for anything from this gap. So I'm going to remove this gap and going back to 1 minute chart. You can see that one more time. I'm not looking for buy. Don't forget about that. Failed to trade this last fair value gap from 1 minute chart, come back again to this last fair value gap, respected this last fair value gap. So beautifully it has been respected this last fair value gap, went higher and came back again to this last fair value gap from 1 minute chart. Now it's my time to look for a sell from this last fair value gap. Okay, this is my time to look for a sell. Can I take a buy over here? No, I can't do that. Why? I should not trade over here. My higher time frame context is telling me I have to come over here. Morning session, I took a sell from there, and then I'm waiting. All the area I'm waiting. All the area I'm waiting. Finally, this market came to this 1 minute last favorable gap. By respecting the high of this gap, so I'm going to remove this gap because I am not interested to look for buy. If I were interested to look for buy, I could use the high market structure shift, fair value gap, trade that fair value gap, market boom, market went higher. So if my context are telling me to look for the buy, I could use this gap to take the buy. Market has cleared the liquidity, higher time frame PDRA here, market structure shift, fair value gap, boom. I got the boom. As my bias is not bullish, I can't take the buy. So all of this area, I have nothing to do. I'm waiting. Finally, this market came here, trade 15 1 minute last fair value gap. Is there any buy side liquidity left? Is there any buy side? No buy side liquidity is left. Nothing is left over here. When there is nothing left over here, look at this candle which has traded this 1 minute last fair value gap. How beautifully it is respecting 1 minute last fair value gap, constant crossman. This is that 1 minute last fair value gap. Okay, so market is perfectly respecting this 1 minute last fair value gap. Look at that swing low. Look, this swing low is a valid swing low for shifting market structure. What I'm looking for, 100% I'm looking for sell. No buy is valid. I'm looking for sell. This is the only swing low which is valid for shifting market structure. Whether can I use this swing low as a market structure shift? My question is, do you really think this is a swing low? Look at the wick. What a big wick. Small body, big wick. Like just from here to here, it's kind of seven handle. So all the candles are like five handle, four handle candle. Here the wick is seven handle. So don't look this type of candles to mark your swing low as a market structure shift. Now, is that a swing low? Of course, this is a swing low. Did it trade a fair value gap? Of course, it has traded a fair value gap. Can I mark it as a market structure shift? Of course, you can mark it, but just use your common sense. Is it does it look like a swing low that is valid for shifting market structure? I don't think so. Instead of that, if you look that swing low, it is much more cleaner, right? Look at this swing low. It is very beautiful to mark as a swing low for shifting market structure. So I'm going to mark this low and extend it to my right. Unfortunately, you will be able to see that. Look over here. Market didn't give you the market structure shift. So I was looking for sell. Finally, this market reached in a certain level. I have missed all of these buys. All of these buys, I have missed them. I didn't take them because this was the lunch hour. I didn't take them. I didn't take this around the PM session. Nothing. I was waiting for a sell. It didn't give me the market structure shift. First opportunity. This swing low is valid for shifting market structure. I got the market structure shift, fair value gap. Can I take this sell? No. Why? It didn't tap to this gap. It didn't tap to this gap. So still it didn't trade a gap, which is an obvious gap, right? Last fair value gap. So it's a random level. This is a random level. This is a random level. I'm not interested to mark this swing low as a market structure shift, even though it has cleared the liquidity. So what you are learning from here? If you are biased, maybe bearish, maybe bullish, whatever it is, you will always try to look for the higher time frame fair value gap or the order block, something from the higher time frame. If you don't have anything from your higher time frame, then from 1 minute chart, look for the last fair value gap. And if you ever see it failed to trade that gap and then gave you the 22 YT model, don't go for this that trade. I don't care how beautiful that setup is. It is very important to remember, guys, because without this information, you will not be able to avoid the losing trade. So if you can see that it didn't tap to this last gap, even it didn't tap, if it has traded this gap this high, of course I could use this as my market structure shift. But I would say that okay, this high, that high, that high, all of them are relatively equal highs, has been cleared. The extreme high market has failed to take the extreme high. So without clearing the extreme high, market has given me the market structure shift. This is a valid 22 item only. Take the sell from there. As you can see, market never trade this 1 minute last fair value gap. This is still a random level. Why 1 minute last gap? Because from the 15-minute chart, hourly chart, I have nothing. So I have to depend on this 1 minute chart. For the first time, it has tried to give me the market structure shift. Market never tells you lie. It didn't give you the market structure shift. Instead of that, it has given you the sell side liquidity, relatively equal lows. Can you see how beautiful this sell side liquidity is? As well as if you take a closer look over here, I'm going to remove now the 50-minute bullish gap because I hope you have already understood the order block logic around this area. This low and that low, what do you see over there? Relatively equal lows. Now my bias, what? Bearish. I'm more interested to look for sell because I'm expecting this market will come here. I have this clean sell side liquidity here. I have this clean sell side liquidity over here. What happened then? Oh man, I'm wrong. You're wrong. This market went through this last fair value gap. Remember this last fair value gap? What did I say? If the last fair value gap is broken, you can use the last fair value gap as an inverse gap. Right? Look at this last fair value gap. This is the candle with speed. It has to break the last fair value gap with speed. Last fair value gap has been broken. Market used the upper portion of this gap. Boom. This was the all-time high that has been created before the market open, right? Before the market open, market has cleared the all-time high and built a new all-time high today, and it has went through this all-time high. It came until that area, exactly over here. That is that last fair value gap. By the way, I'm not looking for buy, brother, so I don't care about that. So what you are looking for? Sell. Finally, market has cleared all the highs. All single highs has been cleared. I was talking about this setup actually through my Discord, and now it is the time for us to go for the boom. Around the morning session, according to the price action, depending on the context. Remember, context is very important. Without context, trading is gambling. We have found one sell only, and then the whole day I was wrong. People was laughing at me, laughing at you. Oh brother, if this is a bullish market, don't look for the sell. This is a bullish market. You should look for the buy only. Okay, we didn't take any buy because taking buy is kind of gambling. We are doing gamble. Why I'm saying this? Because I've seen a lot of you actually posted the screenshot through our Discord where you have shown the buying opportunity. No, without context, trading is gambling. You don't know what you are doing, brother. Finally, this market came to the all-time high. All-time high means joker. You play the card, right? Playing card. So there is a k queen, king, queen, joker, j golem, okay, and then 10 9 everyone. There is a specific card. I called it a joker. So when the market is around the all-time high, that means you have the joker now. You can use anything you want to mark anything. So I am going to mark it as a daily last fair value gap, 4 hour last fair value gap, 1 hour last fair value gap, 15-minute last fair value gap, 1 minute last fair value gap. Prove me wrong. Nobody can prove me wrong. Why? Because this is the all-time high. There is no other price action. This is the highest price action. Before this high, that was the highest price action. So I can use anything over here. I'm looking for sell. Look at that swing low that has traded this valid gap. Okay, this gap has been traded. A beautiful swing low for shifting market structure. Just for the sake of this conversation, I'm going to mark again, just for the sake of this conversation or the beauty of the, like it will look good over here. Just because of that, I'm going to mark this low as my market structure shift. Remember, this low, that low, both of them are valid market structure shift. Both of them are valid market structure shift. So after getting that market structure shift, what do you see over here? Beauty, right? Sell side liquidity. What is I'm waiting for? Sell. What else do you have? Sell side liquidity. And finally, this sell side liquidity, which is clean lows, TGIF line, all of these things you have over here. You got the market structure shift. Where is your entry fair value gap? This is gonna be your entry fair value gap. Oh brother, I'm not interested to take it because it's gonna be a huge volatility. Okay, we'll see that. This is the breakaway gap. Okay, so I don't want to see anybody close above this gap, so I will call it as a breakaway gap and I'll call it as an entry fair value gap. If the market come to this gap within maximum 5 candle, I'm more interested to look for sell over here. So finally, after the morning session, this is the first time I found an opportunity. Around the PM session, I don't really would love to keep my uh, stop loss more than 15 handle. This is the high which has cleared all of this buy side liquidity, right? All of this buy side liquidity, as well as here, all of this buy side liquidity has been cleared over here, and finally this swing high has been cleared by that high. So you have to cover that high and plus 2 tick, that high plus 2 tick, which is gonna be 14 handle 2 tick. Perfect. Go for the 20 handle partial. Where is the 20 handle partial, brother? Exactly with that sell side liquidity, right? That sell side liquidity market left. Hold your trade until this sell side liquidity. Why this sell side liquidity? I should hold it. First of all, market was very near to close. Like 4 p.m. market is going to close. So you can hold the trade until this sell side liquidity, because around 4 market was here. So there is less possibility that market will come here. So you don't need to hold the trade until here. You can simply close the trade exactly to this clean sell side liquidity over here with this beautiful, the best 22 YT model. Trade this entry gap, consolidate a lot, then finally trade this breakaway gap here, and then boom, market fall. Before doing that, what else do you see over here? Before doing that, this is the highest up close body close candles. Candles, okay? Not candle, candles. Why? This is the highest up close body close candle. So I'm going to mark a line from here and extend it to my right. Where the body has closed, did it close below this line? No, it didn't close. So I can't use it as my order block. For example, it has closed below this line. Still, that is not order block. Why? This is the entry gap. So the low of the order block has to be at the line of the low of this entry gap or below this entry gap. At least below this entry gap or at the line of the low of this entry gap. Otherwise, I can't mark the order block. So here, this tool candle is gonna be the consecutive order block. That is that specific candle that has built this order block as a valid order block. Then the very next candle has traded this order block. I'm more interested to mark the 50% or the min threshold of that order block, and would love to see it didn't trade the order block min threshold. If it doesn't do that, that means market is extremely bearish. Of course, it can trade, even it can trade, close above that min threshold 1 or 2 times, like one time. It is also possible, but if it doesn't touch it, means it is extremely bearish. What did you see here? The beautiful order block. Trade this order block, consolidation, 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 lot of consolidation. Like there is no bearish gap, no bearish gap, no bearish gap. Finally, market has, like here, remember the third candle loss, the third candle, with the third candle market can't close this gap. So gap, no, nothing. Finally, this market has built the unfilled gap over here. This was the unfilled gap, market left. Of course, you can look for all other gaps here. It's very small gap over there. Then you can look for the some kind of breaker block where actually there was no breaker block. Instead of that, why this unfilled gap is important? This gap will tell you that this market is extremely bearish and it is going to take your next liquidity. If it doesn't leave this type of unfilled gap, that means market is not extremely bearish. Maybe market will fall, it will take that sell side liquidity, but it will do a lot of up and down, back and forth, back and forth, back and forth, then it will fall. Not this type of fall. First time it leave it by that candle and look at the speed. Here this is the gap. If you find another gap below this unfilled gap, remember, below the unfilled gap, if you find another gap, that is your another entry opportunity from that gap. Here stop loss have to be just one tick above this unfilled gap, and if you have the liquidity, that should be your next opportunity. This is called institutional order flow entry drill, IOFED. By the way, so this was the trade. So what happened the whole day? We have framed a trade here. Okay, from there we have framed a trade around the morning session, around here. Okay, and then stop loss, I showed that, put it above that line, but of course you have to put it above this line. So let's go with the things I follow. Okay, so I would love to go for this high because it is going to close, support my 20 handle logic, and then going to target that sell side liquidity over here around this area. After taking some partial, maybe you will survive and you will get this sell around this morning session. Even if you didn't get it, maybe you will take a 20 handle partial, which is here a 22 handle 1 is to 1, so make it 1 is to 1. So maybe you have taken 22 handle partial and then got stopped out to the break even. You didn't do anything over here, nothing over here, nothing over here, and finally you have got another selling opportunity which has given you 56 handle again. After taking 20 handle partial, maybe you put your stop loss to the break even and then you hold your trade around this morning, this sell side liquidity. So even the morning session, you got stopped out after trailing the stop loss. If you do that, you got stopped out to the trailing stop loss. You got 20 handle partial. If you don't trail the stop loss, you got that beautiful 57 handle run. And to the PM session, you got another 55 handle run. Now, what is the trading called? What is the meaning of trading? Trading means you will keep waiting, 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 and finally every point has been matched, you go in for the trade. If I would love to look for the buy, maybe I'll get a lot of buys. My bias is not bullish because it is out of context. If anyone tell you that this is the bullish market, so keep looking for the buy, they are telling it because they are seeing this is bullish, nothing else. There is no context, nothing, absolutely nothing. No, brother, it is going to trade the all-time high. Why? The all-time high has been cleared over here even before the market start. See, this all-time high was here even before the market start. Market has cleared the all-time high, so this market is in the premium now. It is in the premium. Do you really want to take the buy when this market is around the premium? Don't do that. But brother, it came to this discount area. How do you know this is the discount? How do you know that? The market came from here, that area. So how can you say this is the discount? It's not the discount, it's the premium. Look at that leg. So if I go to the hourly chart one more time for your, for the clearing your confusion, okay, this is for clearing your confusion. This is the opening of that market. So I'm going to mark this low and that high. This is the all-time high. See this equilibrium, this is the equilibrium. Even the this green line, sorry, this blue line is the 50% of that whole range. Let me actually, I can't show it to you, okay, just look over here. This is the 50% here. This line, green, I mean that red line is the 50% or the equilibrium. Above here it is premium. Yesterday or the here, from here premium is important, but not here, because this market took the liquidity. Now it is coming from the discount. I am not interested to explain this discount and premium to this specific video. Please watch that video where I have explained the premium and discount. So it has to come in the deep discount. Where is the deep discount? This is the deep discount. So it has to come over here. If it come to this deep discount, then I can think about the buy. But whenever you are trying to take the buy from here by predicting all-time high, which has been cleared even before starting the market, all-time high has been cleared and made a new all-time high, you are in a great danger, in a very great danger. Now, it worked today, but most of the time it will not work, and you will keep gambling, keep gambling, keep gambling, and finally you have find out that, man, I'm not trading, I'm gambling, I'm blowing account. So don't do that. If you are working with the context, how beautiful that sell setup is, how beautiful that sell setup is. Yeah, I agree with you that order block entry, as I told you, just because it is the clean highs, I will accept that buy, just because it was the clean highs. Instead of that, I'm not interested to go for that order block. Of course, if you took that entry, I really appreciate it, guys, because you have done a good job. You have marked the perfect order block with a perfect logic. I really appreciate it, guys. So that is all about the price action. I tried to make sure that nothing is going to be confusing to you, to all of you guys, to show every kind of scenario, all of this price action. And I hope that it is a bit easier for you to understand the trading. It's kind of 90% waiting, 10% execution. If you do that, the market will always give you the reward. Even though this bullshit price action, all of this bullshit price action, we can, if we are patient enough, we can build a lot of profit from this market. I hope it will be helpful for you guys. But if still you have any question, let me know to the comment box, and don't forget to write down boom if you don't have any question. So until the next video, cheers guys.